end for any questions we can't answer right away. And then we'll also be providing some links and contact information throughout. So if you do have any questions for your information. Also, this webinar is being recorded and will be shared at the end if you'd like to go back and review anything. So without further ado, I'm going to stop sharing and turn it over to Irina and Katie to present from Huntington.
Tommy, thank you so much for your great introduction and welcome everybody. Irina and I are really excited to be here. And just to reiterate some of the things that Tommy has said, definitely, we will definitely go ahead and provide our contact information. If you have any questions, even if it's just an answer from us, we definitely love to be on the advisory space or in the advisory space. So with that being said, Irina, if you want to go ahead and change the screen. So what we'll be doing today is talking about, access to capital, and that can mean a lot of different things to businesses. So ultimately, this can look like just financing your business, sourcing of capital, so different options we'll talk about today that are going to include like micro loans or certain grants, and then us as well being the traditional financing route. So ultimately, don't just go with the first person that you find. It's really important to be able to explore these types of options and create that type of business relationship. So really looking at capital sources, there's going to be quite a few on the page here. So we have bank financing. So working capital, that could include term and real estate loans, lease financing, various other options that, like a draw to term. It'll really depend on the type of situation that your business is in. Time frames definitely go into that as well. So ultimately, with that being said, this is what you might immediately come to mind when you think of capital. So banks are going to have a variety of lending products to support your needs. These could be short-term or long-term loans, lines of credit, credit cards, and all the products may have a different underwriting guidelines and product features. So it's really important to pay attention and pay attention to that detail. So they also may require different equity or collateral positions. So to learn more about what a bank offers you, you would work with a local branch manager like Irina or myself. And once they know your goals and needs, they can provide you with different lending solutions that will fit that need. It's important to compare the products from the bank and from our bank and other banks. A branch manager or a community organization can help you compare and understand different products. Next, we'll talk about like SBA financing. So SBA financing happens through SBA, which is a Small Business Administration. They're an authorized lender like Huntington Bank. So SBA financing provides several benefits for both the customer and the bank. The SBA provides a guarantee to the bank, which allows the bank to take on more risk with a startup business or businesses that are in high-risk industries like trucking. So for the consumer SBA loans, we can give longer, longer loan terms and help with collateral shortfalls. Next, as far as like the community-based organizations like CDFIs or CDCs, they can offer loans as well. So they're a nonprofit organization, sometimes provide loan options outside of what a bank can offer and may have more flexible underwriting guidelines. So these community-based loans are sometimes a business owner's very first loan and a great way to get started in business lending. Now bootstrapping, so that's going to be you, the business owner. So investing your own money or family or friends investing into your business. Often the business owners start a business with your personal savings, or they don't take on a salary in order to reinvest the revenue into their business. There is a very important there's a very important thing business owners can do while in this stage, which is opening a business account. It's important to start separating your business purchases from your personal. So ultimately, the business owners can save receipts, invoices, cancel checks to show personal investment equity into their business. And most lenders will ask business owners to show their equity investment into the business. So by setting up a business account, the bank can cross-check receipts and invoices with the transactions in the business account to show your personal investment into the business. So Irene, if you want to go ahead, and thank you so much. So next is going to be venture and angel capital. So we've all seen Shark Tank. This is a great example of what an investor is. With venture and angel capital, an investor will provide capital. It's important that you understand what they're asking for. For their investment. It may not look like a typical loan structure, and it could be an ownership or management stake in the business, or in exchange for convertible debt or equity in the company. So we definitely want to pay attention to what that looks like. Crowdfunding is another way that we have access to capital. It's used through websites like Kickstarter or GoFundMe. That's one way to get capital. So crowdfunding is set up online and allows the community to contribute to your business. They're typically donations that don't need to be repaid. Some key things to consider with crowdsourcing: any funds donated or raised by crowdfunding cannot be considered towards equity injection. So you will need to personally invest in your business before going to a bank or other lender who may request equity. You also may not reach your goal or won't know when you will reach it. So what does that look like for your business, and does it help solve your immediate need? Important questions when you're looking at the crowdfunding space. Next is going to be our microfinancing. So microfinancing through organizations like Kiva typically happen through a nonprofit organization like a community-based organization. It may help business owners get access to capital when they don't have access to typical banking services. So while you're exploring community-based organizations, also ask if they have a partnership with a microfinancer. This could give you some additional access to capital options. Next, we have the fintech financing. So fintech financing is a non-traditional outlet for loans. So the transaction happens online or through other tech providing financial services. One very important thing to consider with fintech financing is that it may not come with a banker or an advisor that you can build a relationship with. So, in this space, relationships are so important for business owners, especially when you're taking on a loan or bringing on an investor who will help you, if something happens with your loan. Bankers are there as advisors and may be able to help you restructure your loan when times gets tough. And business owners may not have that option with, a fintech financer. Thank you for changing it for me. So now looking at, we talked about a lot of different sources today. So ultimately, which one is the best for you? So once you have compared all of the different options for capital sources, it's up to you to decide what's right. So again, relationships are really important. So to find someone you like and you trust, someone who can answer questions. You also want somebody who knows you and your business and what you're wanting to accomplish, so that they can give you options and feedback. So an example I like to use is maybe you have, a maxed out credit line with one bank or institution. If you go to another lender and request a second line of credit, they will look at all of your personal and business debt. They may not recommend a second line of credit or a card that could put you at risk of going deeper into debt. So the banker may suggest that you refinance your existing debt that can help you bring down your monthly payments, increasing your monthly cash flow. This kind of option is what happens with a banking relationship, and what a banking relationship can do for you as a small business owner to help you reach your goals. So lastly, find what works for you and your business, and your immediate needs and future needs. Capital is a journey, and it's really important for you to understand what that journey looks like and what it can look like. So community-based organizations and your banker can definitely help you map out that journey. Now, next, we want to talk about being application ready. So you have decided that your next source of capital is a banking loan. That's when you come to Irina and I. So we're going to talk about how you can get ready for this loan. So while this material is for a bank loan, these are also great strategies to get ready for, any type of loan or any type of access to capital. So first up is have a business plan. So when you apply for a loan, you will need to tell your story to the banker, and you will need to communicate to other colleagues, and that person will then need to communicate what they've learned to other colleagues throughout the lending process. So having a business plan is the best way to tell your story consistently throughout that process. The business plan can travel with your application throughout the loan process. It's important that you have a business plan even if you've been in business for a while. If this is your first loan, you'll need to tell the story of your business, what you've done, what you want to do, and how your business will change and grow over the next several years. So next up, we want to understand your financial health. So as a small business owner, you and your personal finances are very closely tied together. So even more so for startup businesses, because startups are typically or are typically investing a lot of personal finances into the business to start up. Banks will look at both personal debt and assets, as well as business debt and assets when making that loan decision. So this is because the bank does not want to add additional debt to the business that could potentially or that could put personal debt or assets at risk. So it is important for us to understand your personal health as much as the company's health as well. Next up is understanding those business finances. So those business finances, the bank will ask for financial statements, business tax returns for existing businesses, or 3 years of projections for startups. So banks will also request personal tax returns for the last 3 years and a personal financial statement. Community-based organizations can also help you understand your personal and business finances and the financial health. So the next big step is to demonstrate the ability to repay this debt. So this is most often done through cash flow, either revenue generated through previous years, or if a startup is expanding, cash flow projections. So it's important to show cash flow projections for 3 years. The bank or lender understands that the first year of business often does not generate a lot of revenue or as much as we wish. And as the business owner establishes their new business in the market, the first year can have a lot of fixed cost with equipment, other costs just to get the business up and running. So by showing the cash flow projections over 3 years, it helps the bank better understand how the revenue is expected to change as the consumer base grows and the initial startup costs go down. Now, keep in mind, each loan is different. So understanding the collateral and the equity requirements of a loan are important. Collateral is what you have to secure the loan, and this can be personal assets like your home, car, business assets, things you already own in the business name. Understand the value of what you have as collateral and if it's enough for the loan that you are requesting. So equity is the investment that you have made into the business. The amount of equity injection can vary based on the loan, and is typically some percentage of the loan amount or the total cost of the project. So equity is most often required for startup business loans, loans for expansion of the business, or acquisitions of the business. Now, understanding the 5 C's. So, understanding the 5 C's. So ultimately, with that being said, let's see, one of the best things you can do to get ready for lending is understand your personal credit. When you apply for an SBA loan, the SBA provides an SBSS score. This is a small business scoring system score. It is made up of several different factors, and the SBSS score is priority to an SBA. So the bank does not know exactly what makes up this SBSS score, but we do know that it can be a factor of many different things. So your personal credit score, the length of time in business, the business industry, any credit that has been established under the business name. So for startup businesses, they may not have credit in the business name. So the score may weigh more heavily on the personal credit. So you can pay to receive a business credit report, but you can also access your personal credit report once a year for free. So take advantage of the ability to access the personal credit report by building and repairing that credit. your personal credit. It'll help the business credit, but it's also important to start separating you from your business. You can do this by opening the account, like I mentioned earlier, in the business name and purchasing equipment needed for your business under the business name. So once you've done all that preparation, you'll need to put it together in a loan package to provide to the bank. Community-based organizations can help you put that packet together, and so can us as branch managers as well. So lastly, prepare for that interview and that conversation with the banker. And we'll touch more on this on the next slide. Okay, so at this time, ultimately, I'm going to pass this over to Irina, and she's going to go ahead and go over the questions that your banker might ask in preparation for, this conversation. Irina, you're on mute.
I'm sorry about that. So the questions your banker may ask, how will the business repay the loan? If your cash flow more than the debt of the payments, is your cash flow supporting the debt payments? How will you repay the loan if the business fails? How does the business collect its bills? How does the business pay its bills? How does the business control its inventory? How does the business control expenses? Are all the officers committed to the business? What are the business plans for succession? Does the business have a profitability operating history? Are sales growing, shrinking? Are profits increasing as a percentage of the sales? Is there any discretionary cash flow? What is the future of the industry? Just as it is important for you to be ready for the banker question, you should be also ready to ask the bank questions. You should feel empowered to create the banking relationship that supports you and your business. You can ask the banker how the lending process works and how they make lending decisions. You can also ask how the relationship will look after a loan or as your business grows. Because at every stage, your lending needs change as well. And we as a banker should be able to provide a solution for your growing needs. Can the bank or the organization support you through the different stages of your business? Make sure you also understand the loan product and ask very specific questions around your loan request. Make sure that you understand if there are additional fees or any prepayment penalties. Normally, financial covenants are something that is added to the loan that you as the business owner may need to meet throughout the life of the loan. This could be the debt to service coverage or not a financial measure. If you do not meet a financial covenant that has been added to your loan, you could be at risk of default. So make sure you understand if these are added and all of the details of the loan, even those that sometimes get lost in the loan documents. Your banker can help you with all of this. All of the education that you received so far is very general. You can take it to any banking institution, community-based organization, or even investor group. The next thing that I'm going to talk about, and I'm really proud to share, is a product that is very specific to Huntington. This is our Huntington Lyft Local business. It's a SBA-backed microloan for business owners who identify themselves as women, minority, or veteran business owners, or a business owner who own and operate their businesses in a low to moderate or majority minority census tract, which is basically determined by the zip code where your business is located. A Huntington banker can help determine initial eligibility when you make an appointment. If this loan actually starts with a very low amount of $1,000, so you can start with as low as $1,000 and it can go all the way to $150,000. It is designed to be a low cost capital. So it has 5, 7, or 10-year loan terms, and there are no Huntington fees, nor SBA fees as well that are associated with this loan. There are also a very lower credit score requirement for the loan for those business owners who haven't established a lot of business credit. That's what makes it so easy to get, and just the requirements, underwriting requirements, way less than what a traditional SBA loan will look like. We also are providing at no cost to the business owner free access to an online entrepreneur training program. This program helps with the business owner to build a business plan, create a 3 years of projections, and balancing sheets, as well as if you get a Lyft Local loan, we are providing you with a free account upgrade when you close the loan. The Business Unlimited checking account is fee-free for 3 years, and it has unlimited transactions. In your business account, you can also have a bonus treasury management services, which could be fraud protection or wires, ACH transactions, as well as different merchant services, paycheck. Huntington Banker normally partners with a treasury management partner and helps you find the right solution for you. Again, so we're just going to go over the features of that program. The business must be majority owned by someone who identifies themselves as a minority, women, or veteran, or is in the LMI MMT tract. The credit score can be as low as 140 SBSS score, and Katie touched base a little bit how that's formulated. It is not a perfect match because the SBSS score is a combination of factors. However, it kind of goes around 580, equals to 580 on a personal score. Because it is a SBA loan, the business must be a for-profit business. So Lyft Local is not a program that we offer to nonprofits. It's only for-profit businesses and must be SBA eligible. Example of a non-SBA eligible businesses would be investment real estate, property management, or tech development. This is because the revenue generate from these businesses is from the sale of the house, a collection of rents, or the sale of technology, which is all considered passive income. The borrower must be a U.S. citizen or legal permanent resident. As I mentioned, the loan amount can be from $1,000 to $150,000. The term could be 5-7 on 10-year term. The loan is has a rate which is variable rate. It's a Wall Street +2, meaning it can go up and down when the Wall Street prime rate goes up and down. So it's adjustable. It's adjusts every quarter. The loan does have an 85% SBA guarantee, which is why it can be used for businesses with a lower credit score and startup businesses, also expansions. All right, so we here at Huntington, we always want to look out for people. We help businesses thrive and strengthen the communities that we serve. So how do we look out for our customers through Lyft Local? Because of the low underwriting requirements, more businesses will actually qualify for loans using this program. Providing jobs in the communities that we serve will strengthen our communities as a result of that. We have a free educational opportunity through Operation Hope. And also our borrowers will be better prepared to use that capital. What is a direct benefit to our customer? First, there is no SBA fees. Normally, those fees range at 2%. And also, Huntington fees are waived as well. Normally, those fees are $750. The free financial education that we provide through Operation Hope, it's value, and it don't have to have a loan or you don't have to have an account to take advantage of that, but the value of that program is about $1,500. Also, we provide you with unlimited business checking that has no monthly service charge for 3 years, and also you're getting a free bonus treasury management services. So we as bankers can really help you from your transactional business, which is your checking account, discover any needs that you have for capital, provide you tools and solutions to really complement your cash flow and make it stronger. So you can have a faster you collect your receivables faster as having a merchant, or also providing ACH services that, you know, your clients can pay you through a link. Also, we provide you with can provide you with a very secure business online banking that has two-step verification, and it's very secure. We can provide you with different scanners, so you can do, for example, check deposits from the convenience of your office and save you time on going to the bank, so you can really focus on what's important for you. And we do all that because you're not just a small business for us. Actually, you are a big deal. So I will open it up for any questions that you might have. Maybe Tommy can navigate us through the questions.
Definitely. Love the concluding slide there. Thank you, Irina and Katie, for the information. Yeah, everybody, we will open it up to questions in the Q&A chat. So feel free to put anything you're wondering about becoming application ready, applying for loans, different services Huntington offers, really anything that's on your mind. We would love to hear from you. To get us started, though, we do have one question from Louise here. Louise shared some more specific details to a more specific case in trying to get a loan, which I think would be better if we follow up afterwards for a more unique case. But maybe in general, Louise shared that he's been in contact with Huntington before, but hasn't been successful in getting a loan. Katie and Rina, could you maybe highlight some of the maybe most important things to consider in whether it's, you know, something in that becoming application ready, whether it's, you know, your business plan, your financial projections, but from the inside, what are either you or the underwriters, what are they really looking for and want to see from maybe a newer business that could help increase their chances of getting a loan?
Well, I can speak to a little bit of that. I mean, that's why the business plan is so important, because one, you're going to be communicating from, you know, you're going to start with a branch manager or somebody who is the business expert. And ultimately, throughout that length of the process, that business plan is what everyone is going to go off of. So ultimately, having a secure business plan and with as much detail as you can put in. As far as his specific situation, I know that you guys want to handle that individually. I'm kind of curious to know if we've put in an app or if we're at that kind of stage as to, you know, reasonings as to why we might have declined, or if there's not an app. I mean, I would get on the branch manager or the person that you know, are creating a relationship with, because that's their, you know, it's our priority to be able to look out for you and to be able to help you from start to finish. So, you know, if they're not going to take advantage of it, you know, feel free to email me. I'd love an opportunity to even look at the loan if there was already an application, or if you haven't gotten to that stage and you just want to know what's going on, I can definitely help, you know, help with that conversation.
Yeah, and I'll just say, Louise, feel free to share any information you'd like in the chat if you'd like us to keep answering to your specific case, sort of allowed here for everybody. But
It'll really depend on the point at which he's at. If there hasn't been an application, okay, we're doing a disservice, because ultimately he's ready and he's got a need, and we just got to kind of fulfill that need for him. Now, if underwriting has found that there's something along the lines of history where we're not wanting to take that risk, then that's something we can definitely discuss, and I'd definitely be willing to go into explanation. But underwrite, that's why, you know, the things that we talked about today, just your personal financial health, your business financial health, the business plan, are just so important as far as the financial package, because it's really going to give the underwriting the details needed to make that decision.
awesome. Thank you. We
hope that answered his question.
Yes. We do have another question here. Do banks sign NDAs? I'll maybe just add to this a little bit in the sense of, and McKinney, feel free to provide us with, you know, some more details if I'm sort of off base here, but maybe say a startup business has, you know, this big idea and I bring it to the bank to try to get it funded. Could you maybe speak to just some of the privacy and restrictions around banks, and definitely answering that question of if you are going to sign an NDA or if that's an option. Yeah, I'd love to.
I don't have an experience necessarily with it. So ultimately I know that as far as the disclosures we have, I would assume that we have the proper disclosures in place to make sure that something like that doesn't happen. If you have something that needs to stay with us. But Irina, can you add to that? Have you had any experiences with it?
I don't really, maybe I can take this away and reach out, but I don't really have anything else to add to it.
So we may not know offhand, but we can get you an answer.
Awesome. Yeah, McKinney, if you'd like to put your email in the chat, we will definitely follow up regarding that question. Anybody else have questions or things you're wondering? Awesome. Here we go. So some follow-up on the NDA question. Are there any programs for business owners who have a disability?
Well, I think our programs are welcome to all. So we do not discriminate or in any way or shape or form. So really what we are looking here, or what the underwriter is looking here, is enough cash flow for repayment. That's one of the things. We're looking at good credit history. That's one of the factors that build your SBSS score for the business and the owner. Also, criminal background is also looked at, bankruptcy. So pretty much with a Lyft Local, for example, we are applicants cannot have a bankruptcy within 4 years or nonviolent felony within 5 years. So that's the things that we're looking for, but our programs are welcome to all.
Let's see. We will give it just a few more minutes here while we still have everybody. Let me see if there was anything I had written down as a good question.
Well, while we wait for questions to come in, ultimately, guys, you are the advocate for your business. And the biggest thing that I've learned in the last year is a lot of the business owners I'm coming in contact with don't have a business relationship and don't have a business banker to go to. So if you're looking at your business relationship and you don't have a person who, you can call to answer questions, or to call to share some good news with, or any situation that comes up with your business, and finances are included in that, and you don't have that person to go to, I would highly recommend to reevaluate the relationship that you have, because ultimately there's a lot more to be had other places that are going to, not just look at you as a number, but ultimately, understand your concepts and what you're wanting to accomplish, and really give you solutions that are going to get you there. One thing you'll find about the representatives at Huntington is we're not product pushers, and I'm not here to, sell you on a product that's not going to best fit you. I'm here to be advisory. I'm here to, answer some questions when you have it, and, help you with loan options when you need it, and really just be there for the journey of your business. So, if you guys have any questions, again, we'll share our information. And even if you guys want to understand what it's like to bank with Huntington, I'd love an opportunity to speak with you all.
Awesome. Thank you. We do have one new question here from LaDonna. We have talking about Huntington Bank locations. Now, LaDonna, I'm not sure if you mean South Illinois or south of the US. So maybe Katie and Irina, could you talk about maybe what states Huntington's located in? South of the US, yes. So
of course.
What states you're in, or maybe there's like a link to find a Huntington near you.
Gotcha. Most southern state is going to be Kentucky. So we're a Midwest footprint. So you're looking at Ohio, Illinois, Colorado, Minnesota, Kentucky, It's Pennsylvania, so not necessarily southern states. Irina, I don't know if you can speak to what we do outside of the footprint. I think it's very limited on the business side of things, unfortunately.
Yes, for the business loans, we only provide in the areas we serve, and we have physical locations. We do have home lending solutions for residents of Florida. But other than that, I mean, we can lend like personal home lending solutions in all 52 states for most part. However, for business loans, will be only in the states that we serve, and then we have a physical presence. On our website, you can, search by your zip code and see if you're in that areas.
Awesome. And I'm going to put, there was a question for where can I book an appointment? I'm going to put our SBDC services sign up in the chat. Irina and Katie, if you'd like to also maybe share your contact info, and we can talk a little bit to sort of the partnership as well. I think if you are interested in a loan or just sort of getting started, or you're hung up on something, whether it's the business plan or the financial projections, I'm an advocate for the SBDC as a part of it, as a great, no cost service. It's no cost to you, the business owner. In assisting you through that process, we'll match you with one of our business advisors who can really help you work through that business plan, evaluate, all your different capital options, connect you with someone like Huntington, if you're interested in an SBA loan or one of their programs, just kind of working you one-on-one through that process. So I'm going to add this link here. Like I said, it's all no cost, so we just require registration. Okay, awesome. Thank you for sharing that. Where can you access the information shared today? So I'll be sending a follow-up email with some of these links. And if it's all right, I'll send out the Huntington presentation as well. Otherwise, we'll just do a recording. We'll figure out the details on that later, but you'll receive an email. And yeah, you can review the recording. We'll have it posted in that email as well. So any other questions? I know we still have some time here, so we can just maybe hang out for a bit, but yeah, we're just gonna maybe give it 2 more minutes, see if we get any more questions.
Got a quiet group. I'm not used to business owners being quiet.
It's getting late in the day.
I get it.
I just maybe want to mention that you don't have to reach out to us when you're ready to apply or need a particular solution. You can always reach out to us for a consultation. And even if you're very early, even if you have this great idea and you're looking to start a business, maybe we can give you some advices of how to do that. And obviously, Tommy and his organization are really great at helping you, assisting with the technical tools of preparing a business plan and projections. We do require 3 years of projections. However, I think that initial conversation is very important, so we can help you not get to the point that you apply and you're not application ready. So we can prepare you for that. Even if there's something on the credit that needs to be cleared up, we can provide you some financial advices for that as well.
I love that you added that in, Irina, because I found that a lot of people think because they want to contact me, it has to be this big thing. It can just be hey, I got some questions about what type of accounts you offer. I need a better processing with my payments, certain things that's just going to make your business work more efficiently.
Yeah, and when you mentioned the processing, maybe you already have a processing somewhere else. Like same thing like insurance, a second opinion, a second quote, it does not hurt. Maybe we'll be able to save you on that as well. So we're here to help.
Awesome. Well, barring any last minute questions that come in, I think it's a good time to wrap it up. Irina and Katie, thank you so much for being with us and for sharing all that information.